This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Today's podcast is brought to you by Leverage, a new fully featured decentralized futures exchange without compromise. Are you ready to trade the future of crypto today? Well, Leverage is a DEX, so you can trade with your keys and sign orders just with one click, and Leverage is fast. Yes, indeed, Leverage is powered by Gluon, a new layer 2 solution with the scalability and speed of a centralized exchange and the super low fees of a DEX. Yes, Leverage, the new exchange that combines the best features of CeFi and DeFi, so you can trade crypto spot or crypto derivatives with up to 100x leverage while maintaining control of your assets at all times. It's like William Gibson said, the future is already here, but in this case, it's evenly distributed and completely decentralized. Go to leverage.io, and leverage is spelled Leverj.io, and trade the future of crypto today.
Yeah, boy!
My guest today is Alex Mashinsky. Alex is the CEO and founder of Celsius, the platform that lets you earn interest on your crypto and use it as collateral to get fiat loans. Welcome back to the show, Alex.
Thanks for having me back, Andy.
As I say, Alex is a returning guest. Alex was last on the show in 2019. Seems a little while ago now. A lot has happened since, but that was actually one of my favorite early episodes of the Crypto Conversation, and during that show we talk a lot about Alex's background and life story, and Alex shared some really good stories in that podcast, so I'll put a link to that podcast in the show notes because Alex is an interesting guy, and it is worth listening to that if you want to hear more about his backstory. But today we're all business. We're just going to talk about Celsius and what's going on. So just to kind of ease us into it, Alex, do you want to just give us the highlights version of what Celsius is and what you guys are trying to achieve?
Sure. So we launched Celsius in 2017 with the idea that yield is the killer app for crypto. This was years before DeFi or before all the stuff, farming and all this craziness that we're experiencing right now. And while a lot of other people were focused on lending or giving you money against your Bitcoin, so you could spend some dollars against it, we focused on this idea that that your Bitcoin can earn Bitcoin, your Ethereum can earn Ethereum, and that's never been done before, right? So we were the first to launch an app that allowed you to deposit 45 different assets, and magically they all made more digital assets. So every year we pay about 6% in Bitcoin. So if you had 100 Bitcoin in January, and on last day of December, you have 106 Bitcoins. So that's really the magic of Celsius. We now have over 500,000 users and over 11 billion in assets under management. So obviously it's been, like you say in the UK, a smashing success. But really the success has been really the fact that our users, our 500,000 users, are so much closer to financial independence and to retirement and into achieving their dreams. That's really what we are really excited about and proud of.
That's right, Alex. And one of the things that you always talk about, and I guess this is part of the ethos of crypto, of blockchains, of DeFi, but you've often used the slogan "Unbank Yourself," and you talk about trying to, or you do offer the services that the big banks have appeared to abandon, things like fair interest, a good amount of interest, low or zero fees, fast transactions, and, the ability to access financial services, even if you don't have a decades-long, finely curated credit score and all that kind of stuff, right?
Yeah, so I think it's easy to blame the banks and say, oh, it's their fault, they're so bad. And they are bad. I mean, it's not that Celsius is so good, it's that the banks are so bad that they make us look great. But we can only blame ourselves because we as consumers elect to give our money to institutions that don't do anything in our best interest. They charge us fees for the accounts. They charge us fees to withdraw money. They charge us inactivity fee. I love that fee. Like, you don't do anything in your bank? Fine, we'll charge you a fee for that too. Yeah. So what Celsius tried to create is really a no-fee business, meaning we don't charge any fees to anyone. We've never in our history charged a single fee to a single customer. And basically our entire motto is based on do good and then do well. And the do good means create some yield on Bitcoin, on Ethereum, and then you get to keep 20% of it. You're going to give 80% back to the depositor, to the customer, where banks take 80% of the profit and give it to their shareholders and keep the 20% for themselves. So it's, look, banks can pay you the same interest Celsius pays. It's just that they elect to not give you that money. They elect to give that money to their shareholders.
Yes, indeed. And so famously, I guess it was earlier this year, Celsius, you crossed 10 billion in community assets, or assets, I guess, that people have deposited with Celsius. Can you tell the story behind that number, Alex, and just put it into context? Like, what's the sort of the growth trajectory that Celsius has seen across the last 2 or 3 years, and what do you attribute to that?
Yeah, so January 2020, which is just over a year ago, we had 550 million in assets, and we basically in January this year we had just over 10 billion in assets. So obviously, it's a huge growth. Also our token, because we have a token that helps you earn more, was the best performing asset of 2020. If you look at Masari, if you go to masari.com, I think is a website, you see the rankings of all the top performers. So Celsius was ranked number one. The Cell token was ranked number one performer with something like close to 4,000% appreciation. So, the funny thing is that, like, who knew that doing good would also result in doing well? Because normally, the motto is either steal from your customers in a way that they don't recognize, right? In a way they don't feel, or basically give them something in the beginning, something good, and then start charging them or place a lot of ads or whatever the scheme is, right? But rarely you'll find a service where the more people join, the more everybody benefits, and the more everybody benefits, the more the Cell token or the token appreciates, and the more it appreciates, the more it attracts more people, and you have this flywheel where it's a win-win-win. So I really, and I've said that I think in our original interview, I said that I hope that what we created will become kind of almost like the standard for everybody else. And if you look at the hundreds of projects now that are offering yield, both in DeFi and in CeFi, almost all of them use the same idea of, here, earn some yield. And if you want to boost the yield, here's a token, and you can either farm or do something with that token. So the first time ever anyone created that was actually Celsius. So we're very proud that we started a whole industry, and we're very happy to see that a lot of people are joining us, because if we were still the only guys out there shouting off the rooftops that it's all about yield, I can guarantee we would not have 10 billion in assets. So the fact that everybody else joined, I think, got the pie bigger for everyone. And we obviously got to, we have 10, I think total of DeFi is 45 billion. So we have 10 out of 45. So that's not a bad market share for being a trailblazer.
Yes, that's exactly right. And yeah, from one angle, Celsius probably is the OG of yield, and I think that's quite a nice position to be in the markets. And it's cool also, Alex, because I guess, one of the things that people in crypto always like to talk about is the history of finance and the history of money and the history of markets. And, that is really what lending and borrowing it is. It's just one of the oldest forms of finance, and it is a crucial part of human behavior and human civilization. And so do you see yourself as kind of pioneering financial markets 2.0 or whatever we call it, this new thing that we're building right now, right?
We're definitely following the footsteps of Satoshi, and even before Satoshi, many other people who kind of invented, like Scott Stornetto is one of our advisors for Celsius. He's the inventor of the Merkle tree back in 1991. And, Satoshi refers to him 4 times in his white paper. So these are all people who basically opened our eyes to the idea that you can go from a single entry to double entry and now to triple entry, right? I mean, the blockchain is effectively triple entry accounting system. And what's unique about that is that instead of relying on an intermediary in a double entry accounting system, you have 10,000 nodes that tell you the truth, and no one can lie. No one can basically deny or say, well, that is not true. The truth is written on every one of those nodes. So the question is, what do we do with it? Do we recreate Wall Street? Do we bring the worst ideas from Wall Street and recreate them on the blockchain? Because a lot of the projects are doing just that, right? Or are we going to create a new, a new type of innovation where we actually put our fellow man and our principles as the foundation for creating better services? And really what frustrated me, and that's why I started Celsius, was that of all I've seen, exchange, service after service, just bringing the worst of Wall Street onto the blockchain. So we decided to do something that really has never been done before. There has never been a bank in history that paid 80% of its revenues to its depositors.
Yes, and I think the next step to go here, Alex, and you kind of alluded to this when you talk about, deciding not to try and reinvent all the worst practices of traditional banking. So I don't know if you're aware of a guy called Richard Sanders. So Richard is the lead investigator at Cypherblade, which is an on-chain analytics company, and he's been quite a vocal critic of whoever he perceives as bad actors across the crypto ecosystem, and there are a number of targets, and Rich is coming. He'll be back on the podcast with me in a week or so to talk about some of this stuff. And in the past, he has been quite skeptical of, let's just say, crypto lending services, because sometimes they are, black boxes, if you like, in the way that old school banks are. And yet, when you guys at Celsius, I think it was December last year, you completed a reserve audit, right? Using, I believe it was a chain analysis tool, which effectively showed at the time, whatever you had in assets at the time, I believe it was 3.3 billion, but that was kind of a proof of reserve, right? And so the way I would frame this is it's kind of a contrast between Celsius and someone like BlockFi, if that makes sense.
Yeah, so first, I kind of second what he said as far as not trusting most people in crypto. And there isn't, and I'm saying that with a lot of pain, because unfortunately, almost every yield product to date was a scam and was a Ponzi scheme. From BitConnect to a dozen other names before them, unfortunately, people leverage the blockchain to extract trust and effectively steal assets of people who were hoping that you were there to help them or act in their best interest. So when you build something, if you're actually doing it right, and if you are acting in the best interest of your customers, and by the way, I'm the largest customer of Celsius. I personally have over $300 million in digital assets on the Celsius platform. So if anything happens to Celsius, I'm the biggest one to suffer. But the point is that if you're doing it right, you should have no problems doing an audit at any time. And actually, we are planning to do a real-time audit all the time. So we're launching this new thing called Proof of Community, which is actually launching a month from now, together with the Horizon blockchain, where we are going to allow anyone to audit Celsius all the time. So you don't even have to be a Celsius customer. You can go in and you can verify not just how much we have in assets, but also how much did we earn? Did we pay 80% of it to the community? And if you are a Celsius user, you can put a special key and verify that you got the pro rata that you're supposed to get out of the pool. So whatever Bitcoin earned, if you're 1% of the pool, you can verify with zero proof verification effectively that you got the right pro rata, that you're not getting scammed, that no one is stealing it, and that it was actually earned, because all those transactions transverse through the blockchain. So what we've done 2 audits now with chain analysis. So we're using their systems, their methodology to run a report that calculates all of the deposits, all the withdrawals. So that's our net deposits, and calculates what do we have in assets, and makes sure that it compares it to and says, yes, Celsius has more than the net that they're announcing. Meaning, if our customers gave us 3.3 billion, this was I think the number as of November 2020, we have to have more than that, right? It's not just that, because if you gave me 3.3 and it earned interest, it needs to be more than that, right? So, and that's what we've done recently as well. We've done that. When we issued a $10 billion press release, we also did the same verification using the same tools and so on. And we're going towards this real-time verification, which again, just like I did in your previous podcast, I'm challenging everybody in crypto. This is open source. We're not doing this and hiding the keys or hiding the methodology. The opposite. We're basically saying that the companies of the future, and we're setting a new standard here, are all going to be fully transparent, and you'll be able to audit them at any time, not just when Ernst & Young runs an audit a year later on stuff from a year ago, right? Because it always reminds me of Lehman Brothers, that 2 months before they were bankrupt, Ernst & Young, or I don't remember if it was Ernst & Young or one of the other auditors, but PwC, I think it was, basically released the audit for Lehman Brothers and said, everything is wonderful. Here are the results for last year, for 2017, right? Because it went bankrupt in 2018. And obviously it was completely irrelevant and completely misleading for anyone who read that report and who gave Lehman even more money. So what you really want as a depositor, and all of this effort is done to help the depositor, the person who holds the money, know if they should continue holding their deposits or assets with somebody like Celsius or withdraw them.
Yes, Alex, that is right. It is just, it is such an opportunity for anyone playing in this space, and whether they're a service provider such as yourself, or a potential client or user, I should say, of one of these services. The fact that everything is on the blockchain does in theory, it should make everything just much more transparent and fair. And if everyone is playing by the same rules, then that is the whole point. But and look, I don't want to bait you into kind of talking smack about your competition here, but I think we can do it in a fun way, because Celsius and I guess BlockFi, you guys are kind of the two big heavyweights in this industry at the moment. Not quite DeFi, but maybe CeFi, but doing really well and offering really competitive rates. And look, we'll talk about like DeFi in a second.
CZ came up with the right term for it. He calls it CDeFi. So
sure. Exactly right. And look, CZ is making some big moves themselves. So we'll talk about that in 1 second. Let's just kind of finish off on BlockFi. I mean, you can say whatever you want here, but what I found really interesting is, there was another competitor who I hadn't heard much about these guys, but I think they're called CoinFlex, but they created this kind of FUD website called Ditch BlockFi, which really tried to throw those guys under the bus. And the BlockFi guys, they did some heavy lifting and kind of rolled out all the big names, the big influencers, your Dan Hilds and your Pomps, guys like that, to come out and say that it was fun. Exactly.
Yeah,
exactly.
They rolled up all of their shareholders who have billions to lose. Yeah.
So I don't know if there's any comments you want to dive into there.
Well, sure. Look, so first of all, it's public record, and the funny thing is that these guys, Ditch BlockFi, whatever it's called, the website, actually had slides right out of the BlockFi investor presentation. So there wasn't even anything that BlockFi could deny. But it's public record. You can go and look at the grayscale filings and see the BlockFi name there and see how much they hold. And obviously, if you do simple math of saying, okay, they hold $2 billion worth of GBTC, for example, and it's trading at a 10% discount, that means they lost $200 million, right? So they, whatever the customers gave them and what's the value of the asset today, the difference would be negative $200 million. Now they ran quickly and raised like $300 million to make sure that they have some money in the bank and they can show a positive balance sheet. But you have to understand that BlockFi is not a profitable business. BlockFi has never made a profit, and they publicly stated that. Zach on several occasions said that he's using money from the marketing piggy bank to subsidize rates. Celsius announced several times, when I'm announcing it today on your show again, that we are profitable and that we never had a bad event, like somebody stole from us or we got hacked or one of our counterparties didn't pay us or anything like that. And obviously that's why the only raises that we've done were actually community raises. We intentionally went out to the community, unlike BlockFi, and allowed our best customers to come in and sit on the bus right next to us, not just have the sell token, but also have equity in addition to them earning yield, the highest yield in the industry. So each person, I'm not saying in any way that BlockFi is a bad company or bad people. I think they're good and they mean good. They're just trying to make money for their shareholders, but they're definitely not here to help the little guy or here to help decentralization or anything like that. That's definitely not on their to-do list. They don't have a slogan that says do good and then do well. Their slogan says do well and then do well.
Yeah, it's a good way of putting it. And just to be clear, I'm not trying to diss BlockFi either. It's just it's always good to compare and contrast, and then the end user can make their own decision as to where they want to best do business or place their assets. So let's switch gears slightly to potentially other competitors, and I'm really talking about DeFi here. So I guess. Who would you say is your closest competitor in DeFi? Is it Aave?
Well, we are probably the largest single user of Aave. So
right.
So I wouldn't say we use them. I don't think they use us. Maybe, well, we borrow from them. So yes, so they use us as well. So in a way, on the DeFi side, we use all the platform. We use Compound, we use Uniswap, we use all the large platforms. Sometimes we use them for yield. Sometimes we use them because we need to borrow one asset and we have a different asset. So they help us with that transition. So I think it's definitely very collaborative effort. Like I know Stani, he did his ICO the same month we did our ICO. So we were kind of going in parallel. And again, after we created yield, everybody was like, oh, it's all about yield. Let's go create some yield like Mashinsky did. So we still some moves from them. They still some moves from us. I don't see them as competition. I think we really competing for depositors with the banks. That's where the competition is. So today, if there's 7.8 billion people on the planet, 7.79999 of them don't know anything about DeFi, don't know that Celsius exists. Even if they knew that we were, they wouldn't even know what to do or how to approach and how to take advantage of it. So the challenge for all of us, and here I even include BlockFi, is to convince the vast majority of those people that banks are not your friends. Banks, that you need to unbank yourself, that you need to take, maybe not everything, but you got to take a portion of your assets and you got to put them into this non-fiat denominated store value like Bitcoin or Ethereum and then earn yield on it. So those are the things that we help the community do, both educate newbies and bring them onto the blockchain. Most of our customers are noobs. They're not, like if you're a crypto pro and you know how to manage your keys, you're probably doing DeFi all by yourself. But if you're not, it's much easier. If you have a day job or a family or any kind of like other activities besides sitting in your mother's basement or living in Puerto Rico and doing DeFi around the clock, you're probably using Celsius. So we think that the vast majority of that 7.8 billion needs a service like Celsius. They cannot leap into DeFi or leap into managing their own keys. And that's why anyone who's like trying to say, oh, it's going to be CeFi versus DeFi. No, it's totally not. You know, and some of my best friends are DeFi guys who are just really good at what they do. I can tell you that on average, if you take the rates that Celsius paid on average, they were on average much higher than DeFi was in the last year or two. So if what counts is how much you earn over a period of time, even after our fees, I mean the 20% that we keep, that's the only fee we actually charge. Even after that 20%, your yield, your net yield is still higher than almost any DeFi platform.
Yeah, no, that's a great point, Alex, and you described that relationship really well, and I think that's exactly accurate and a good way of approaching things. You know, Celsius, you guys are providing a way for, you know, noobs or new people to the ecosystem, or just your average Bitcoin holder who might have a slab of Bitcoin. They want to earn some yield on it, but as you say, they have a day job or they're just not too interested in going right down the DeFi rabbit hole right now, because there's still, like it or not, there are some serious risks in DeFi still. But what happens next here, Alex? So hypothetically, could someone like, you know, your Goldman Sachs or your JP Morgan, what is stopping them from creating their own fork or carbon copy of Ethereum and then just building, they can just fork off all these other chains, Aave, whatever they want, and then just slap a Goldman wrapper and create their own apps? What's stopping them from doing that?
Well, really nothing. And actually that already happened. So 2 years ago, JP Morgan copied Ethereum. Most people don't know that, but they created a fork of Ethereum called Quorum, and right. they have like 300 people or more. I think now it's like probably 400 people working on the JP Morgan version of Ethereum. Now it's a private network. It's not a public blockchain, and it's only for friends of JP Morgan. So you got to be a big fish, a big customer of JP Morgan, and they'll let you jump on this kind of like a settlement infrastructure that they created internally, right? So what you said already happened more than once. And I think, again, I'm old enough to have lived through the birth of the internet. And during that period, we had 3 versions of the internet. We had the government version, the information superhighway. Remember Al Gore and those guys? We had the corporate version, right? So that was IBM and Microsoft and other companies telling you, it's all about the intranet, and we will build it for you, and we will run it for you. Forget about this public internet. It's not safe. And then you had the public internet, and who won? The public internet won. So I hope that here, especially with the fact that crypto is mostly retail, the public version of the public blockchain is going to win, and that all of these proprietary, even though they're forks of public blockchain, they're really proprietary implementations of Ethereum or Bitcoin or whatever, are all going to die off. So I don't see the banks winning here because really they lost the trust of their customers. And you can only fool so many people so many times. Unfortunately, until now, there was no solution. Until 2017, until Celsius launched this thing, there was no alternative, right? There wasn't, okay, I'm going to take my money from here and put it over there. All the major banks were offering you 0.1% interest, right? It didn't matter if you went across the street and opened an account at a new bank, the rate was the same. So when Celsius launched, I think the average rate in the United States was 2%. Now it's less than half of 1%, right? So we pay anywhere between 10 and 20 times more than the best banks, the banks that paid the most. And again, JP Morgan pays 0.1%. So Celsius pays 100 times more than JP Morgan on your dollars. All you have to do is take your dollars, create USDC with them, right? Turn them into digital dollars, deposit them with Celsius, earn 10.5%. So you have to ask yourself, who's crazy? Is Celsius crazy? Is Alex Mashinsky crazy? Are all the people copying Celsius crazy? Or is JP Morgan just stealing from all of us?
That is exactly right. I love that. All right, let's finish this off. We'll just go to a very quick break, and then we'll come back and finish off. I'd just love to get your thoughts on where the market is at, and I'd be remiss if I didn't ask you for your opinion on NFTs. So we'll be back in 1 minute.
In today's crypto market, the team at Brave New Coin are the sector's leading builders of custom crypto indices. BNC's powerful indexing engine draws on Brave New Coin's premium data to calculate high-frequency intraday and end-of-day indices for a wide range of index products. BNC's custom indices help you to gain exposure to the crypto assets class and track your performance against the market without having to become a stock picker. Not sure what you need? A Brave New Coin consultant can help you assess your requirements. Contact BNC today to find out more. Are you ready to trade the future of crypto today? Introducing Leverage, a self-custodial decentralized exchange that performs with the speed and features you're accustomed to. Leverage is fast. It's powered by Gluon, a revolutionary DeFi infrastructure that makes DeFi work at scale. It brings speed, transparency, and massive gas efficiencies to its users. Say goodbye to exchange hacks, front-running, Ethereum network congestion, and high fees. Leverage is the future of trading. It combines the best features of CeFi with all the benefits of DeFi. Like William Gibson said, the future is already here, but in this case, it's evenly distributed and completely decentralized. Go to leverage.io and trade the future of crypto today.
And we're back, and I'm with Alex Mashinsky from Celsius. Hey, it's been great to catch up with you again today, Alex. Look, let's just finish this off. I'd love to get your wider thoughts on where you see the market at the moment. Obviously, we saw Bitcoin hit an all-time high, 62,000 USD, whatever it was, over the weekend. And then we've had quite a severe dump. Since then, I think we're back down to around 55K at the moment. So first off, where is the market at? And then we'll finish off with your comments on NFTs.
Sure. So the market, we call this severe, but in Bitcoin terms, this is just a normal correction. So I do expect us to oscillate a lot. Even though we're adding a lot of corporate and a lot of institutional investors, it is still a very volatile asset. And I've mentioned that last year, I hit it right on the nose. They asked me in January, my prediction, I said, Bitcoin is going to close at 30,000. And they were like, you mean like 30, more than 30,000? I was like, no, 30,000. I missed it by like 4 hours. So this year I made a prediction that by end of December 2021, we will have gone over 160,000, but closed the year below 100,000. So I see us having like basically we're gonna blow off steam at about 160,000. That's just looking at kind of like longer term charts and this accumulation of demand. But there's going to be too many people who are going to be tempted to sell their coins at those levels. That's why we could probably close the year at below 100,000. So I think, again, a lot of volatility. We may lose 10, 15% before we go any higher, but we're definitely going to break all records and set up all new records for Bitcoin.
Fantastic. Will be fascinating to see if that plays out, and hard to think that it won't, just with so many buyers on both the retail side and the institutional side. And look, we are in a bull market, so anything can happen. All right, I said we'd finish off with NFTs. So, Alex, what are your thoughts?
So look, I mean, I went through the first CryptoKitties craze back in 2017. And obviously there's something here. I mean, there's no question that segment of the market of non-fungible tokens is here to stay. It's not an experiment that's going to disappear. The question is, are we going to see quality assets being utilizing NFTs, or are we going to see just a bubble where anyone creates any kind of crazy NFT and the thing just sells 100 times over and everybody tries to flip it to the next person at a higher price? So right now we're getting into bubble territories, and you don't see the quality that I would hope to see for it to be a sustainable business, but it's definitely attracting millions of new users into the blockchain that may otherwise would have never come. They may have never come for yield or never come for store value, but they're definitely coming in for NFTs. So net is definitely a positive, but we need to improve the quality of the assets.
Very sensible, Alex. All right, I like that. Thank you so much for joining us today. Close us out. I'll just hand the microphone back to you and tell the people where they can go if they want to find you on your various platforms. And look, let's have a final plug for Celsius. Go for gold.
Yeah, so on Twitter, I'm at Mashinsky, my last name. I also have a website, mashinsky.com, if you want to learn a little bit more about where I've been. Celsius.network is the company's website. Download the app or come to our web app. And basically, we don't have a minimum deposit. We don't have any lockups. We don't have any fees. We basically always treat you, the customer, the way I treat myself. I really built this service almost for myself, and then 500,000 people showed up. And we're here to make the world a better place. I know it sounds corny and silly, but blockchain does give us an opportunity to do good. And I've committed to, I've been very successful before. This is my third unicorn. So I'm definitely not doing it for the money, but I've committed here to give as much back to the community as possible. And our mission is to bring 100 million people onto the blockchain and give them financial independence.
Fantastic. And so just to put that in context, how many million people how are we going on that goal?
So we're at 500,000 right now. We're 500,000 out of 1 million. So we still need to, 20x or 200x?
Yeah.
Yeah.
Brilliant. All right. Hey, really appreciate your time. As always, thank you, Alex. All the best. And we'll see you next time.
Thanks for having us.
Boom. All right. We are done. How was that? Hope you enjoyed that. Always good to catch up with Alex Mashinsky. Great to see those guys at Celsius doing very, very well indeed. And as I said at the top of the show, look, if you did find Alex an interesting character, I do recommend that you listen to the first podcast that we did together, because it was a while ago, but yeah, as I say, we really got into Alex's backstory, and he had some really fun, interesting, and fascinating, controversial stories to tell. So I can't recommend that podcast enough. There is a link in the show notes to that episode. Anyway, better leave it there. I'm out of here for today. I'll be back. Next show, I think, will be with Samson Mao from Blockstream. So, yeah, excited to have Samson back on the show and catch up with him too. So make sure you are subscribed to the Crypto Conversation, and then you'll know when each new episode drops, because, man, we have upped the publishing schedule. Running at 3 episodes a week right now, but the quality control is still high, so we're good to go. So do appreciate you guys still listening, and yeah, please do let us know how you're doing, how the show is, any feedback. Always interested to hear from people. Just drop me an email, andy@bravenewcoin.com. All right, bye for now. This was the Crypto Conversation for Brave the New